Welcome, everybody, to another episode of the Rosefellow Podcast. My name is Mike Jager, and I am the co-founder of Rosefellow. With me today is my partner in crime, Sam Tsoumas. Sam, thank you for once again doing this with me. We're excited because we've had a lot of great feedback from the first few podcasts we've done. And you brought up a great topic that I think a lot of our viewers would love to hear our opinion on, which is risk. So, you know, if we think of risk, maybe one of the questions that comes first to mind is, how does Rosefellow calculate risk?
I think it goes to the very onset of our creation. When you and I were talking about it, first thing we always said we would do is develop properties on spec, something that was generally not done in the city of Montreal. So first and foremost, the fact that we're doing that in a city that has generally never done that is automatically a risk that we are taking when we started the company. Montreal has never been known as a city that people would build, simply because the market stats were never there. And even today, they're not exactly there. You look at, average rental rates, vacancy rates, everything is on a negative slope as opposed to a positive. So all the metrics that would be viewed would show that this is a risk to do. You and I looked at that, at least from my point of view, when we said, Montreal has a very, very old industrial product. Therefore, if you build industrial product on spec, it would basically lease up, notwithstanding what the market vacancy rate was. So we mitigated that risk based on the stats that we thought were viable.
I remember how much time we spent with potential investment banks as well, selling that idea of spec in Quebec. It was, like you mentioned earlier, it was unheard of. Common practice in Toronto, common practice in Vancouver, but Montreal spec, it's never been done. How are we going to succeed? And I remember the first couple of meetings that you had actually were challenging.
One of the things that we did, if you remember, we showed a financial model of a project, and we showed if we delayed the construction as opposed to building it and not being rented, it was actually more viable to have it vacant for 12, 18 months as opposed to building it in 12 to 18 months, simply on the unknown factors that would have remained: interest rates, financing rates, construction costs. All of those unknown factors, as opposed to setting them in stone today, made it that it was more viable to build it and leave it empty for 12 to 18 months.
The other calculated risk that I think that comes to mind is how we didn't wait for the market to peak to start building on spec. We planned it with the idea and the hope, but again, calculated when we thought it would hit its peak and built accordingly a year and a half prior to. And we were the only ones that had space available for tenants when that, call it that peak occurred.
Yep. And we're doing it again. Think about it. Everybody slow down. Everybody. What are we doing now? We're developing now, not for today. We're developing it for 18 months from now, 24 months from now. Eventually, the market will better itself. We'll be, again, the only ones ready to accommodate, the new demand.
We had a podcast a couple of weeks ago with Jean-Marc Dubé from Colliers, one of their top executives, and he said that we will feel the same amount of demand for industrial space in mid 2025 to 2026 that we did during COVID. If you think of those dates, who's the only one who's building on spec now? Who will have property readily available for those dates? We are. That'd be here. That'd be in Ontario. No one is building as much as we are right now. So I think we sit in a very, very good position. I thank the banks who've believed in our vision, our partners who have as well, our investors. So again, I think that's a great example of calculated risk. I think another example we can think of when we think of risk is acquiring some of the sites we have where the zoning we ideally look for wasn't in place. And I think of the South Shore, Candiac as an example. Yeah. Where we leveraged our negotiating skills, I'll say, with cities to acquire accordingly.
You have to take where you see the market's going. One thing that we've noticed recently is that the market has changed from being solely distribution to now manufacturing is coming back to Montreal. We're starting to see it. Whereas before, you and I would never look at a site that only had manufacturing as zoning. I think today we actually could. And if you pick the site properly, those are risks that are mitigated. Something that we also talk about is, outside of selecting the sites, every time we do acquire a site, people see Rosefellow, see Mike and Sam, and they go, oh, they've made it. That is not true. That's far from it. Every time we do something, we risk everything, and people don't seem to understand. I think it's important that they understand that any, developer, when they acquire a property of a significant scope, whether it be us or any of our competitors, they generally put their company at a financial risk that sometimes they may not be able to recover from. And that's how we've seen some of these large developers, whether it be residential, retail, or industrial, have fallen in recent years because they've risked on certain assets that did not pan out.
I think another great thing that has helped us as well as our team. You think of the risks we take, but you think of the team we put together to help mitigate those risks, from our construction team to our urbanists, people we hired. I mean, just recently, Christopher, a person who was not only on the private side of real estate, but on the public side, working at cities. Someone understands what it takes to get a project past the finish line. So I think with every risk we take, we try to mitigate that risk by having the right people in place to be able to solve the issues we may or may not have.
I think it goes down to what you and I started. When everybody's slowing down, we ramp up. Same thing with hiring. Most people have laid off employees. We've actually hired more in the last 12 months than we ever have before in our existence. And not only have we hired, we've actually gone out and looked for the top tier talent, in our opinion, which comes with a cost to it. That's because we believe in where this market's going. We believe in 24 months, 36 months of what the city will allow us to do.
I've got asked the question 100 times following an article that went out recently about our desire to expand into the United States. I've been asked, why take the risk? Why go into an unknown market? I don't look at it as unknown. Any project we've done in any city could be considered an unknown. You and I are so data-driven, so research-oriented. People don't see. I mean, they see the tattoos, they see the kind of nonchalant look that we have, but they don't see the hours and hours that we spend when everyone's out on weekends. We're in the office, when we're on the phones at 10, 11, 12 o'clock at night just talking about the stats. We do so much research behind the scenes before we make any move, that it be a local municipality that's kilometers away from us now to a new province, to a new state. Just in recent months, you and I have made the decision to expand to the United States. I think we have data on every state, the pros, the cons. I've spoken to city officials that when we make that move, for those of them that think it's a blind move, they're completely wrong.
No, exactly like you said, nothing we've ever done is just on a whim. Again, you're right. People see us and they see the tattoos, they see the jeans, the t-shirts. That is furthest from the truth. Even while we're just living on a Saturday, with our families, we're actually always talking work, talking stats, talking what could we bring to that particular market. And I think the U.S. is frankly poised for the type of development we could bring. For me, it's not a risk. The risk is if you grow too fast and don't put in the proper infrastructure, which is something we've never shied away from. Everything we've done, we've always put in the proper infrastructure. We've made sure that we have the right professionals, the right legal infrastructure, the right team internally to help us with that expansion. We're not going to go and build 8 new buildings in the U.S. with the 18 people we have here. That would never happen.
How do we balance risk and rewards in a project?
Well, that's an interesting one. Evidently, the more risk you're willing to assume, the more reward should be.
I agree. I mean, so many sites that we're acquiring today are so problematic at the onset, where if you look at who we compete against, there may be 2-3 guys, because people get so scared off at the issues with the site, that it be contamination, zoning. There's no site that's perfect today. we're fortunate enough that we're willing to sit down and kind of really look at it and say, is it worth the risk? And to your point, the higher the risk, the greater the reward.
Yep. Another thing, though, is sometimes we see things that we don't deem it risky where others would. And I think that goes back to the very beginning, our first actual acquisitions. We were, I think, the first to purchase land at $30 a foot in the West Island of Montreal. And people were saying we were crazy. We were underwriting these properties at a rental rate of $9. They were saying we're crazy, that would never get there. Well, by the time that property was up, it was already surpassed the $9. And, the same thing when we acquired the sites in Kirkland off the Trans-Canada. We were able to pay a larger price per square foot. And today we're being used that against us. But there was thought to this. The reason we were able to pay more, it wasn't a risk to pay more. We actually got more buildable square footage and the way we designed that. And people think, oh, well, there is risk. There's actually less risk than people think. There is always thought to how we do things.
Sam, if we're to look into the future, what do we see as emerging risks in real estate or industrial estate?
The biggest risk is the financial market. It has to come back. The interest rates have to lower. Thankfully, just recently, they did go down by 25 bips. That has to change. It has to continue going down. This has caused an upheaval in the capital markets and the lending markets, investor confidence, tenant confidence in the market. That still remains the single largest risk. After that, I would say we have to spend more time looking at how we design the buildings, even more so towards the future. We talk about future-proofing these buildings. We've done a very good job. We talk about, bay sizes, heights. I think we actually have to take that a step further. How do we look at future technologies, future sprinkler systems? Right now we're capped at about 45 feet before you go, in-rack sprinklers. I think all of this is where we have to really mitigate the buildings and how they'll survive in the future.
I think another thing that's important to consider as well is where we build, and what I mean by that is it was humbling and admirable to see how the states welcomed our ideas of building our industrial projects in the various cities or states. How they welcomed us with open arms. I think there needs to be. I'll speak about Montreal. Montreal needs to reflect on how they do things now. Are we really doing what the best we can to welcome others to our city? And it's not just about people, it's about businesses. If unfortunately the top executive of a business only speaks English, but the company's going to set up here will have only French-speaking employees, that's okay. Yep. That's okay. We need to do we need to do our part as a city to welcome that investment, because we want to see Montreal grow, and it won't be done strictly on who we have in the city.
Well, this is where I would say you and I have to play a leading role. It's convincing the organizers of these events that how important it'd be bilingual.
Yeah. I agree 100%.
Here's a question for you. Tell me about a project that caught you off guard with regards to risk that you didn't expect. In your own mind, how did you handle it? Did we do good? Did we not? We've seen many instances where things happened that we didn't expect. So give me an idea of one.
Sam, we never push projects upon cities. We go in with the idea of a collaborative approach about doing something in partnership with the city, a give and take, win-win. I remember when you and I went to a city with a beautiful presentation kit of what we thought would be great and what the city would appreciate. And we were asked to look at how we can densify an industrial site by creating an industrial building with townhouses and condominiums above that industrial building. We were presented by the city projects in Tokyo and I think Sweden as well, and said this is what we want. I think that caught us off guard, especially the fact that we had already notarized on the site. We had already spent $20-30 million on land to get that kind of a surprise. So that was one heavy risk. Fortunately for us, we explained the situation, explained the cost, and at the end of it, it is going to be one of the most beautiful industrial buildings we've done to date, if not the most beautiful, and most energy efficient. Yet there will not be any townhouses.
No,
there's not going to be any forests on the roof.
Daycares.
There's not going to be any daycares or microbreweries, like one of the comments that they brought up on the roof. But it took a little bit of massaging. with these city officials to make them understand what's viable and what isn't for a site. So that was one that caught me off guard, but I was happy with the conclusion, and we're negotiating now a very large transaction within the space with the long-term tenant.
Although we're almost 5 years in operation, I still feel like we're a startup. Every day that we walk in, every project that we talk about, every new development, it feels like it was one of the first. And for me, failure is what, keeps me up at night. There is no turning back. We have to make this succeed. We have to make this succeed for our families, financial future. Now we have 18 employees that work with us. They have families. I'm terrified of, something going wrong, a failure.
To your point, I think that's the reason why we still, to this day, look at every file like it's the only file we have, and it's life or death. The amount of time we spend in DD and due diligence on every file today is the exact same amount of time we did, if not more actually, than the first ones we've done. We take so much time in analyzing every last deal. It feels like it's life or death, and our team resonates that same feeling of need or desire to make sure it works. And again, we base what we do on promises we give.
Yep.
Every time we tie up a site or we shake a vendor's hand, we look at them in the eye and promise, and we'll take it to the finish line. Fortunately, it hasn't happened that we've dropped. I mean, in COVID, there was a situation where a vendor didn't allow us to extend a due diligence because the city was on lockdown. That wasn't on us. Outside of that, we've taken every file to the finish line, and why we do so is because we spent so much time in our analysis.
Even prior to securing a site, we spend an enormous amount of time. And what I've noticed over the years is actually our due diligence budgets have increased to ensure that every possibility of risk is at least been identified while we're looking at the site. So exactly to your point, if we don't take a site to finish line, it's because there's something there that is wrong with the site that is not repairable.
What keeps me up at night? Vacancy. Our buildings. I mean, that's what I kind of look over on my end with our side of the team. And let me tell you, we put up these buildings on spec, and we do that based on research and data that we have. And statistically, the building should be rented 6 months into construction. But let me tell you, from that initial shovel in the ground up until that those leases are signed, that's what keeps me up at night, thinking, have we done enough? Have we done enough research? Are we taking the right risk? That is my biggest fear. Is I wake up and sweat sometimes just seeing empty warehouses.
All right, so let me alleviate this for you on two different facets. One is exactly what we've been talking about, which is risk. Even if it's empty, they will rent. Think of it like this. We've done all of our due diligence, location, heights, bay sizes, timing. Everything has been thought of.
Absolutely.
With regards to it not renting, I'll bring us back. You and I started in the business mid-2000s.
Mm-hmm.
Those were the dog days of industrial real estate, right?
Absolutely.
We still rented.
Yep.
It's a lot better now, and we are a lot better than we were. You'll get it rented.
For those of you that are listening, we'd love for you to listen into one of our discussions at 4:35 in the morning, where Sam and I are on a treadmill side by side when most people are sleeping or maybe just about to get up. And we're talking about statistics and vacancy rates and what we need to do to rent or brand a building. We live and breathe this business that we're in. We each have our own kind of risks that keep us up at night. It's fun because it takes us from extreme highs to extreme lows, all within the same day. So I don't think this is going to stop.
But that's what's fun about what we do.
It is. But what's crazy is that we risk, it's not thousands of dollars per project. These are millions of dollars of our own money now that we're putting up. We're risking on a daily basis with every site. So when we make the call and we sign those offers and we get them accepted, or we sign another loan and we're once again putting everything we have on the line, project after project, it's understandably something that'll keep anybody up at night.
You cannot succeed if you don't take risks in life. I am a firm proponent of always taking a risk. However, it needs to be mitigated to what level you're acceptable with. But if you do not take risks in anything you do, you'll stay stagnant. You will never advance or evolve. So if I could give any advice, take risks, whatever it is, both financial or personal. Take the chance, take the risk.
I think the biggest risk in life is not taking any. I've mentioned this many times on our various podcasts. The biggest fear I've always had, I don't have anymore because we've taken the risk, was to grow old and to get to an age where it would be too late to follow my dream. So again, I think the biggest risk in life is to not do what you always dreamt of doing. Fortunately for you and I, we took the leap of faith. We took the biggest risk of life and risked everything we had to start this. But today we can look back and if it would fail tomorrow, it'd be okay because we would do it all over again. I'll speak for myself, and I know I'm speaking for you when I say this. We would do this over and over again 1,000 times until we succeed. So that for me is the biggest risk is not taking any.
You and I heard a quote a few days ago. I don't know if you remember it, and it stuck to me. Make the wrong choice, you can fix it. Make the right choice, you made the right choice. Make no choice is death. And that stood out to me.
Absolutely. I think that's the best takeaway from today's podcast. So myself, Mike Jager, and my partner, Sam Tsoumas, thank you once again for tuning in and looking forward to answering any questions you may have. Feel free to send them our way, and we'll be more than glad to respond accordingly, and looking forward to the next one. Have a great day.